Yo, what's good everybody? Welcome back to another video. Today we're going to be doing the final installment for part 6 covering support and resistance. We know in the previous video, we discussed the very basics of what support and resistance is, how to identify it, and how, we can use that to identify high probabilistic setups inside of, different market conditions and using just basic concepts of market structure. Now, in today's video, we're going to be going over, more of an advanced approach and showing you how this applies on charts. So in the last video, we discussed and we know that support and resistance, all it is just mainly key levels where decisions are being made. Either buyers are entering the market or sellers are entering the market. So we know that resistance acts as a ceiling. We know that price tries to push above, sellers enter the market and push price lower. Same thing, rejects and becomes resistance. It is a ceiling. Price cannot get above that for the time being. That is resistance. We know that support is the floor. Price tries to go lower. Buyers enter the market and create this floor, which is known as support. We know that resistance can become support. We know that support can become resistance. We also know that in bullish market conditions, we're only looking for buys, right? So when it comes to using support and resistance, we're only waiting for price to break above resistance and then pull back into that level of previous resistance and hold as support. That's all we're looking for. We're not taking sells at resistance. We're simply waiting for the pullbacks and support to form to ride price higher. Now, that same thing is true for the flip side of that. If we're in bearish conditions, we're waiting for support to be broken and pull back into areas of previous support and hoping that it holds as current resistance. Now, finding these high probability setups can be very simplistic. All you need is basic, key concepts from market structure and support and resistance and tying that together. Now, obviously, there's a lot more that goes into it, such as, candlestick confirmations and market patterns and candlestick patterns and types of rejections and all that stuff. And we're going to go into all that later. But for now, we're going to be identifying, high probability setups just based on, market structure and support and resistance. So with that being said, guys, before we really jump on the charts, I just want to make it very clear that I do not claim to be an expert. I do not claim to know everything about markets. I'm sure there's somebody out there who knows so much more than me and that there's easier ways to do this. But all I'm going to be doing is sharing with you guys, my ideologies on support and resistance, how I identify it, how I've used it to help become profitable. And that's all I'm going to be doing. If there's easier ways out there, or if somebody else explains it better, that's fine. No hard feelings, follow their way, whatever. I don't care. All I'm doing is sharing my ideologies with you guys, hoping that it helps you become profitable. Now, before we dive into the charts, we know that support and resistance is a zone. It's not a singular point in price. Okay. Now, I do use lines because it's easier for me to see, but we need to remember that support and resistance is a zone, right? So you're going to have, price rejecting and bouncing off this zone, but price can also reject right when it hits the zone. It can go into a little bit more of the zone, and it can also go a little bit past the zone. This is called a touch, gap, and overlap way of looking at support and resistance. Now, when it comes to identifying support and resistance, we want major rejections. That is how we identify these key levels. And this is how we're going to identify, where we want to get in markets, because price is actually going to be, moving away from that level. And that's how we make profits. We don't make profits if price does something like this, pulling up to levels. If it just wants to piddle around in this zone, doing this type of shit, this is not a major key level in my opinion, because it's just so choppy around there, right? We don't want to be in scenarios like this. Remember, if we see conditions like this, what do? We leave the markets or, wait for it to actually get to a key level. When identifying a key level, we're waiting for price to do something like this. When it hits that level, we want it to fly away, right? We want it to, oh shit, like there's buyers in the market, get away from it, okay? Or, we want it to, break through and pull back in and then fly away. We want these major rejections that show that, okay, yeah, this is a serious level. This is where, buyers and sellers are really entering the markets. So when we go to the charts and we go to identify, our actual main key levels of support and resistance. Now remember, support and resistance, supply and demand, order blocks, whatever you want to call it, it's all the same shit, right? It's just levels where people are making decisions. Either buyers are entering the market or sellers are entering the market. So when you're identifying these levels, you can mark them as zones if you wish. I don't. I use lines because it's just easier for me to see, and I use the just straight horizontal line, and I go to the daily charts when it comes to marking support and resistance. I know people that mark support and resistance on monthly levels and weekly levels, but for my strategy, I only need daily because I'm more of an intraday, almost scalping trader, so I don't need to know these, these monthly and weekly levels that price is going to take, a couple weeks, to develop at these levels, right? I need, more of, levels that are more relevant to me, right? So when we're identifying these levels, just know that if you see a level that I don't, or I mark a level that you don't see, it's okay. Okay, everybody's going to see the market with their own perspective because everybody's eyeballs are a little bit different. So when it comes to marking these levels, I am looking for major rejections. So I start on the daily, I grab my horizontal line tool, and I color code it white, and that just helps me know that white is my major levels, and I'm expecting big reactions from these levels. So when it goes to marking these levels, I'm going to put one here. Why? Because we have it held as resistance here when price tried to get above. We see a major rejection to the downside, and then when price finally broke above, we see it pull back, and we see this level hold as support that was previous resistance, and price goes higher, almost immediately flies higher, right? And then we see price pull back. What does it do again? It respects this level of previous resistance, now support, holds as support, and then it gives you another chance to get in. These are 3 different opportunities off of the same exact level. Now, just remember that these levels are going to be reusable, just because this stuff happened, held as resistance in May, held as support in June, support in August, and then as you can see right now, current price, it's holding as support again in December. So these levels are definitely reusable, so that's why I mark a horizontal line all the way across my chart. Remember, if you want to use the zone, just you grab the rectangle and draw your zone all the way across the screen. I don't like doing that because it's not good for my eyes. I just see the lines better. Just personal preference, okay? Do as you wish. Now, when it comes to marking my daily zones, I'm only going to be marking levels that are relative to current price. When they're close to, current price, I don't want to be marking a level that's all the way up here that's, probably crazy amount of pips. It's almost 2,000 pips away. Like, it's going to take forever to reach there. For example, it took from October to December to go in between these levels, right? I'm not going to wait, 2-3 months. I'm not marking a level that's going to take probably 2 or 3 months of price action to get there, okay? Because all it's going to do is make your chart messy, and you're going to have so many lines. So I'm only marking, levels that are close to current price because it's just simple and it's easy to see and it helps my eyeballs. So I'm going to mark this level because it's, a current, it acted as support right here, acted as resistance here, acted as support here a few times. And as you can see, we had a big drop off of that. So I'm using that level. Now, really, I'm only going to be marking, like I said, maybe 2 to 3 daily levels. I'm not just marking these levels to just have a bunch of fucking lines on my chart, right? I'm marking these levels because it is relative to current price. And also, with that being said, it is levels that I can, look to take trades off of relatively soon. And also, I'm looking for major rejections. I'm not marking, a bunch of these bullshit tiny levels in here and like a bunch of just random shit, right? You could, if you wanted to, you could mark this level. I like this level. Why? Because we held as support, price broke under, came back up, retested previous support, held as resistance, so on and so forth. Now, when trading support and resistance, remember, we need to be trading in confluence with the trend. So right here, as you can see, price was bullish. This is all a bullish trend. As you can see, we get higher high, higher low, higher high. Price pulls back. Where are we taking buys from? Support. Now, obviously, at the time being, this was not support. Okay, we did not know that this level would hold as support, but it did, and so now we got a higher low. Price comes up, forms a higher high. What are we doing? We're looking for buys. Where at? These previous levels of resistance, hoping that it holds as support. So we could have took a buy here. Price goes higher, pulls back to where? The previous level of support. We can anticipate buys. We could have took buys here. Could have waited on this retest. Another opportunity for buys. So, like we said, you're taking into fact that, the daily trend is bullish, or for example, like in this instance, the daily is bullish, or it's bearish. So as you can see, we flipped bearish, and I'll show you right now. So price, sorry about that. I had to get a drink. I was about to die. But as you can see, price was bullish up into really this point. We created a high off of this push from the higher low. Some people will mark this as the higher low. I like doing 2 candle pullbacks, so I would mark this as my higher low. Anyways, so we were bullish all the way to this point. So we're only looking for buys at key levels of support and resistance. Okay. But what happened was price pulled back, or it broke lower, broke the last significant higher low. Either way, even if you had this marked, it's still bearish. Okay. So then what are we waiting for? We're waiting for price to pull back into our key level of previous support, looking for it to hold as resistance. We would have taken a sell there. Okay. And then price breaks lower. Where do we anticipate price? What are we waiting for? Waiting for price to pull back to give us that discounted price. And price pulls back to the previous level of support, looking for it to hold as resistance. It did. Obviously, we take price lower. So now what are we doing in this scenario? We're waiting for a either pullback up into this daily level, or we're waiting for a breakout lower and then a pullback to continue. Now, when trading daily levels of support and resistance, all we're doing is trading zone to zone. Okay? So just like we gave, 30 examples right there. If price is below the level, we wait for a pullback in if we're in bearish conditions. If price breaks low, we're waiting for a pullback. And where are we looking to take it? To the next zone. If price breaks below, we wait for a pullback, looking to take it to the next zone. Okay? And same thing if you're in a bullish trend. If price breaks above, we wait for a pullback, looking to take it to the next zone. Okay? If price breaks above, we wait for a pullback, looking to take it to the next zone. So on and so forth. That is marking your daily levels. After I mark my daily levels and I identify, what the daily trend is, I drop down to the 4-hour time frame. And I mark my what I call minor levels because they're not daily. And I mark these with my horizontal ray tool. And I like the color to be black. That it signals, it's a minor zone. And the white ones, I know are my major daily zones where you're going to see major rejections. Now, before we go in and mark off, minor levels on the 4-hour, I just want to make it very clear and show you guys how price reacts off of these daily levels on lower time frames. So we know that the white lines were made on the daily. We know they're major levels, right? So when we drop down to, when we drop down to the 4-hour, you're going to see price react to these levels in a major way, right? So as you can see right here, this is daily support. When it got to that level, it rejected and flew up, okay? When price pulled back in, we see rejection and price goes up. Okay, we break through. What are we doing? We're waiting for pullbacks on the daily. Okay, as price pulls back on the 4-hour, we see rejections down, pulls back in, rejections down, pulls back in, rejections down, and flies down. Where to? The next level. So all we're doing is we're looking for, pullbacks into these major levels. Now, when I'm marking minor levels, I'm not marking. It's the same philosophy as marking or major levels. But I'm not marking levels just to be like, oh shit, that looks cool. It's got a couple rejections. I'm marking it, right? I'm marking a minor level on the 4-hour if it actually needs to be marked. If I'm actually seeing like big time rejections. Now I would mark this as a minor level because as you can see, price held here as support, flew up. Price held as support, flew up. Price breaks below, and now we're at this level. We are rejecting, holding as resistance, or looking to hold as resistance. So this is literally all I would have on my chart, is I would have, a couple dailies and then one minor zone. Now when it comes to taking entries, I will drop down to the 15-minute time frame. Now keep in mind, whenever I go to this example, we'll take it back to, we'll go like right here. The right here looks pretty sweet. Okay, now obviously this is a cherry-picked setup. People are going to be like, oh, hindsight's 20/20. It's easy to pick these out when it's not current price. I get all that. But remember, as traders, our job is to identify high probability setups. And all we're doing as traders is literally cherry-picking setups. You don't have to be in a trade to be considered a trader. So we're looking for these high probability setups. Anyways, so we know that the daily, bearish, 4-hour, bearish. So when we drop down to, the 15-minute time frame or 30-minute time frame, I use the 15-minute time frame, and we're looking for entries. We know that there can be trends inside of trends. For example, the daily's bearish, 4 hours bearish, but on the 15 at this at this price right here, price was bullish. Okay, price was bullish because we're making higher highs and higher lows, right? We're making a higher high, price breaks above, pulls back, breaks higher, right? And then we get this consolidation shit. Now remember, when price is consolidating, what are we waiting for? Okay, we're waiting for a breakout. Now with this example right here, we know that we're at a major level of support and resistance, and we know we're on the underneath side, and we're looking for sells. So when we have a setup like this is like my bread and butter. Okay, so when we have something like this, we have consolidation on the 15. There are two different entry points that you can take. Oops. Fuck. There we go. We can either wait for, and then when I'm marking my 15-minute, like very minor levels, I just use the trend line and I just hit the shift key and it draws it straight across. Very simple. Anyways, so we know that daily bearish, 4-hour bearish, and we've pulled back into this major key level. We're looking for sells. We see price is bullish. We see consolidation happen. There's two things we can wait for. We can wait for the last significant lower high to be, or higher low to be broken. That means the trend now on the 15-minute flips bearish. Okay, so you can either be, god dang it, I keep missing that key. We can either be on the breakout of this consolidation, so you can either be taking your entry right here. Stops go above last significant lower high. Targets are our next zone, which is going to be a little bit away. Ah, fuck. Sorry about that. Price is going to, we're targeting our next zone. Now, obviously, I don't know if I would be targeting this big of a zone. I would probably, maybe set up like a minor target in here and then, trail stops to there. We'll go over all that. But for now, we're just taking, high probability setups based off market structure and support and resistance. So that's one entry. You can wait for the breakout of that consolidation, or like we said, you can wait for the trend to flip. So we can wait for this last significant lower high to be broken, or higher low to be broken. So now we know the 15 minutes bearish. And then basically we can just be waiting for a retest somewhere up in here. So we can wait and be patient for that pullback. I'm going to go ahead and leave bar replay mode and then just kind of scroll back and look at it. Where are we at? Okay, so now obviously, if you were waiting for that retest, you would have gotten it right here. This being the last significant lower high. God dang it, last significant higher low, my fault. So now we know that price is bearish. We are waiting for that pullback up into this level. We got it right here, so this could be another entry for you. There are multiple ways to take these entries, obviously, and we're going to go over that later in the course. We're going to be going over, candlestick confirmations, market patterns, candlestick patterns, how to tie that all together with higher time frame correlation and everything. But for right now, you should now know how to mark your major daily levels of support and resistance. You should know how to mark minor levels of support and resistance. You should know how to, tie that in with your trends and your market structure, and how to find, just setups based on these major levels. Now, guys, this is all I do every single day. All I do is I mark my daily levels. I mark maybe one, maybe two minor levels, and then I just drop down to the 15-minute time frame. I wait for my time of the day to pop up, and then I'm just looking for these entries. So like for this example right here, once again, we know that the daily and the 4-hour are bearish. We know that this 4-hour, or this black line, is a 4-hour level. We know it's a zone, so obviously it doesn't have to come all the way up and hit it. We know that the zone, it's a zone around there, okay? So with this example, we have daily bearish, 4-hour bearish. We have 15 bullish because we're forming higher highs and higher lows. So one thing you can wait for is you can be in on the breakout. This is actually really sweet because we got a breakout and then an instant retest of this level. So you can wait for the break of the last significant higher low, which would make this bearish. So you could have gotten in, right at the break. Let me delete this real quick. So you could have gotten in right at the break of this last significant higher low. Okay, so you could either got in right here, entry here, stops go above last significant lower high. Your targets are the next major level, which is down here somewhere. Down here. Obviously, I wouldn't set this big of a target. I would be targeting, something a little bit closer because I'm an intraday trader. I don't want to be swinging. Anyways, so there's one entry, or you can wait for exactly what it did right here. It breaks under, it pulls back up, retests this same level, and then drives lower. You could have got in right here on the retest. Either one of these setups or either one of these entries are ideal. That's just ways to take trades off of major levels, and that's all I do every single day. Now remember, when it comes to marking these levels, you're not just marking levels for shits and giggles. You are marking major levels. You want to see levels where price, if it hits it, it flies away from it, okay? So that's really it for part 6 covering support and resistance. You should know pretty much, how to tie it all together and find high probability setups using market structure and support and resistance. With that being said, guys, I'll see you guys in the next section. Peace.